I want to talk about the insurance crisis, right? There is an insurance crisis, especially for a lot of y'all, especially especially for a lot of y'all that are buying homes in these places that's going to be disrupted, right? You're buying homes in these places that are going to be disrupted. I'm telling you. I don't know if some of y'all remember because a lot of y'all may be new to the live stream, but I actually spoke about the fact that I was investing the majority of where I was investing in from a real estate perspective because I believed that that was where everybody was going to have to move up to because of different factors, especially things that's happening over in Florida and affordability and a rent crisis and climate change and hurricanes and insurance industries are leaving certain states like Florida and California altogether and all of these different things. And I actually be doing, I give y'all insight and I tell y'all all of this stuff way ahead of time because I be trying to help y'all to understand how things are going to play out in your lives. And you need to be paying attention to certain factors, not what's going on Instagram, not where everybody is moving, not where all of the migrants is coming in. You need to be paying attention to different factors that we talk about outside of that, especially when we're talking about it on Patreon. All right. I got a new video, a new investment real estate strategy video that is dropping this week. And then we got Stock Club inside of the Bag Chasers. We going to get to it. Shout out to Splash Spotlight. Look like y'all all starting to get together. Nissan Versa that sounds like a BMW M3. Let's get to it, y'all. Last subject, and I'm going to get y'all out of here for the day.
Love this house. It was our dream house from the beginning. We even thought it was over our heads, but we just worked really hard and made it become our own. And I love it. I have my horses here. I have a 100-pound tortoise that I saved. So yeah, I just love it. It couldn't be more perfect for
Save the
us.
turtles.
But Allstate, who insured Darlene's house for 18 years, recently sent her a non-renewal notice.
You can't just say after 18 years of being okay, all of a sudden today you're not okay and that's it.
Home insurance company.
Oh, y'all didn't know insurance companies was a business? Y'all thought the insurance companies was there in order to serve you. No, insurance company is there to serve the shareholders. Did you know that Berkshire, do y'all know how Warren Buffett adjusted from the textile industry with Berkshire Hathaway in order to invest in insurance companies? Do you know how profitable insurance companies have been for Berkshire Hathaway stock? I bet you don't. Because you don't study these things. You're not trying to understand what Berkshire Hathaway is doing. Listen, after 18 years, even Chris Ball came in like a good neighbor. State Farm is there. Did you know that the Allstate man, remember what Stella got her grooves back? Y'all remember what Stella got his groove back? The guy from Allstate, the top guy, the guy that was messing with Whitney Houston inside of and then he wound up going to Allstate and doing a bunch of commercials. After 18 years and found out, listen, he got up out of there. They got up out of there. The same way that Whitney Houston said I could do bad by myself is the same way that Allstate said that we going elsewhere. And it does not matter how long you have been a customer. They will drop you without even blinking twice.
Companies are saying homes like Darlene's are too risky to insure. The nation's largest homeowners insurance company, State Farm, has decided they won't accept new applications for property in California.
If you are in California, not only are they dropping customers that they currently have, they are walking away from the possibility of people even being able to get insurance in the first place. It's bad. When you are making an investment, you have to be very, very careful into why you're investing, as to why you're investing, where you're investing. Location is not just relevant to whether or not you like the spaces that you're in as far as the neighborhood is great. It's also relative to so many other factors, including whether or not you can even get insured and why insurance companies are not even taking applications in a specific state in the first place. Shout out to my girl, Mika. I love you, Mika.
Household names like State Farm, Allstate, are pulling out of these markets. They know the risk is just too high to be actuarially sound for their business.
There are companies saying there are too many buildings being destroyed by catastrophes, inflation is making it too expensive to rebuild, and they can't protect their investments any longer.
Losses are increasing related to climate risk. As that risk increases, so does the cost of insuring those assets that people have on hand.
But without homeowners insurance, many homeowners can find themselves in big financial trouble.
I've been trying to find another insurance. I had one company step up and said they'd do it for $12,000 a year. I go from $2,000 to $12,000. Yeah, we would have to move. There's no way.
But selling the home might not even be possible.
The moment that an individual gets a non-renewal letter from the private insurance market, they essentially lose 12% of their property value.
It's not just
the minute that you get a non-renewal notice from an insurance company, your property value drops roughly 12%. So let's do the math. Let's say, for example, you're sitting in a $500,000 home, right? And they say, you know what? We don't really want to renew you at all. So now your property drops by $60,000. How did Anton get to 60? 12% or 50%? Okay, 10% is 50,000. 1% is 5,000. That means carry the 1, take the 2. 5,000 plus 5,000. That gives you 2%. Roughly $60,000 comes off of the value of your home the minute that they decide that they don't want to renew your insurance. I bet you didn't know that. The property value drops off because the cost of being able to insure the house goes up. The cost goes up. The property value drops off. The house goes up. The property value drops off. That means that you immediately lose $60,000 in equity off of your home.
Just California. Louisiana and Florida are contending with similar issues due to flood risk. Why are so many American houses becoming uninsurable? And what will it mean for the economy when so many homes lose some of their value?
It means it's always going to be winners and
Darlene
losers.
bought her house
and
for
so what y'all need to do, let me give you the summary immediately. What you need to do immediately is get out, leave, run, sell it to the next sucker and leave him holding the bag before you find yourself in a space to where you are going to be under duress and getting stuck with a $50,000 drop in value in your place. If y'all live in these places, listen, you can rent there. You can go and visit there. You can do that. But you need to make your main home. You need to make your main home in a place that's a lot more stable. And you need to make sure that you making your investments and you're stacking your money and you're investing your money in spaces that's going to continue to go up in value. If insurance companies are pulling out, you need to too. They already see the writing on the wall. They seen the writing on the wall a long time ago.
$120,000 at the behest of one of her best friends.
My girlfriend that I've known for close to 40 years, she's the one that brought me to this. She lives 2 doors down, and she said, "You have to buy this house." So I had really no choice, but it was the best thing we ever did. It's just 3-bedroom, 2-bath, and it's only probably 1,700 square feet. You know, it's just perfect. You know, I'm an outside person anyway, so what's the most perfect is the outside. I have a huge pasture for the horses, and the backyard, I had an artist come and she painted all my animals on my back fence. So when I go sit in my little girl area where we have a little glass of wine, all my animals, even the ones I've lost,
y'all about Florida a long time ago.
Of the barn.
I've been told y'all about Florida.
Darlene and her husband still owe about $360,000 on their mortgage. Most mortgage lenders require home insurance as a prerequisite for the loan, and 58% of Americans hold mortgages on their homes.
You are allowed to live in your home without insurance. That will be called self-insurance. It depends on your financial situation whether or not that is a good or risky choice. Insurance acts as a risk transfer tool. So in order to make sure that that investment that the bank is making with you, should something happen, a catastrophe, a natural catastrophe or a man-made catastrophe, if it happens, the insurance allows the home to recover.
The insurance business model works like this. Companies assess the risk of damage happening to a home and collect a premium accordingly. By insuring properties with varying levels of risk, they are able to spread the liability for the riskiest assets among the whole group. They reserve some funds to pay out claims and invest others. They typically make...
This is why people call it a bank, because basically the insurance company don't actually shell out money until there's actually a claim. So for all of the time that basically you are paying into it, if she never had a claim over the last 18 years, that means that was all 100% profit. 100% profit. If she never had a claim in 18 years, but she was insured for 18 years, that means that's 100% profit. It's like a bank. You store money until it's a possibility of a claim, and then they take the majority of all of this claim money, and then they give it a percentage of it to this and to that and to that based off of the people that have claims. But it all goes into a pool that ultimately is called insurance. That's basically what insurance is.
Make their profits via safely held investments.
The insurance rate is
and then in the meantime, all of that float money, they making money on top of money because they invested that money into other things that ultimately is going to pay them. Listen, basically all I'm telling y'all is that y'all need to become the bank. It's not that hard. It's really not that hard to understand. The minute that we divest ourselves from the mindset that we need a bank is the time that we then become the bank. You become the bank. We need to become the bank. Stop being interdependent on the bank that makes money off your money, and then you do the same thing in reverse. That's long story short what it is.
Of the risk. Insurance rates are the effect of the risk, not the cause. So the insurance company, in order to operate its business as it should in a profitable manner, needs to do what it can to get those insurance rates to better reflect the risk.
Yep.
Now, insurers are saying climate change, inflation, and the regulatory environment have created a situation where it's difficult to operate a profitable business in some locations across the country.
Private insurance companies are withdrawing insurance in high-risk areas due to climate risk, and people are seeing their premiums increase in the public market.
Every state has seen an increase, but 12 states have seen their average premiums more than double.
The insurance is regulated at the state level.
Some researchers refer to aspects of the regulation as premium suppression, which may result in climate risk not being fully priced into the market. For example, look at Prop 103.
Proposition 103 in the state of California was something that was passed all the way back in the 80s.
In California, due to the regulatory policies, essentially don't allow climate to be included in the calculation of insurance premiums, but they also say,
yeah, well, they don't care about what you think in California because they're going to do the thing that's in their own best interest, not what's in your best interest. Listen, this is what it comes back down to, and this is what you guys need to understand. When you're deciding when you want to live or where you want to move or where you want to buy a house, there's other factors that you need to take into consideration, because if you are spending that amount of money and you ultimately are going to be paying for the house 3 times over because you got a 30-year mortgage, then you need to be very, very careful about where it is that you park your money. Your home is not always a safe investment, ever, especially the home that you live in. Think outside of how you feel in order to make an informed decision on where you need to invest your money, all right? That's largely what it comes down to. And y'all need to be very, very careful of how it is that you allocate your resources.